Hello and welcome back to this channel. Area of value is the gold mine of trading success. Area of value refers to an area on your chart where you could find potential buying or selling pressure in the market. In an uptrend, the area of value is where buying pressure tries to push the price higher. In a downtrend, the area of value is where selling pressure tries to push the price lower. Traders always try to find the location of buyers and sellers' activity to enter or exit the market. These areas of value are considered as the gold mine of trading success. All you have to do is use your price action knowledge and become rich like professional. In this video, I'm going to take you through an amazing practical example and show you step by step how you use these area of value to enter the trade and become one of those professional millionaires traders in the near future. It is so easy and simple, and you can do it. Area of value could be support and resistance, moving averages, trend line, wedges, triangle, channel, and so on. To find the area of value, the price should come close to the market structure and touch and respect the market structure at least twice in order to be valid. To prepare your entry setup, you have to go to proper time frame to find the precise location of your entry setup. Now, if you are in H1 time frame, then you go to M30 or M15 to find your entry trigger. If you are in H4 time frame, you go to H1 time frame to find your entry trigger. And finally, if you are in a longer time frame like W1, you go to D1 time frame to find your entry trigger. Now, if you are at the bottom of a downtrend, look for the following pattern and formation like hammer, bullish engulfing, morning star, three white soldiers, and so on. Or you could use candlestick mat blending at any time, which are the big probability sign of the market reversal, and use them to enter the trade. Now, if you are at the top of an uptrend, look for the following pattern and formation like shooting star, bearish engulfing, evening star, three black crews, and so on. Or you could use candlestick mat blending, which are the big probability sign of the market reversal, and use them to exit the trade. To understand what is the area of value, look at the following example. Let's assume you buy an orange for $1, and that's the price you pay, and the value you get is an orange, which you can enjoy eating it immediately without going through a hard process of growing an orange tree. In this case, the value you get is more than the price you pay. That's why you buy it and you pay for it. Now let's again assume you buy the same orange and you pay $100. You will still get one orange and enjoy eating it, but the value you get is much smaller than the price you pay. You may ask what this has to do with the stock market. In a stock market situation, you can buy share at any time and at any random price level in your price chart. But this doesn't mean you will get a good value for the share you buy. If you enter the trade at the wrong time and the wrong place, the price may never go up because you didn't buy the share near or close to the area of value. That's why lots of traders, they lose so much money and they get discouraged and they give up. Value is referred to the area of your chart where potential buying or selling pressure step in and want to push the price higher or lower. These areas are extremely crucial when you enter the trade. In the next few slides, I am going to show you clearly how you use area of value and buy share like professional from the stock market and make maximum profit. How you find the direction of the trend? It's very simple and easy. I'm going to show you this in this example. This is FRU stock D1 time frame, Yo Finance. D1 is my longer time frame. This is my price trend. You see, the price trend is above my SMA 200 market structure. So we can conclude that this trend is upward. And it's going to continue going up with a big probability. So if you enter this trend, then you know that the trend is going to go in your direction with a big probability, so you are going to make money. Now, in order to enter the trade, you have to find the area of value. So in order to find the area of value, you have to go to one time frame lower. This is D1, so you go to H1 time frame. Each candle represents 1 hour of trading. And you have to look for area where the trend come close to the market structure. It come closer to the market structure. The closer, the better. You see, these areas are area of value. These are not area of value here because the distance from market structure is too big. These are not area of value. You cannot enter the market around this area. It's not beneficial. So if you go to one step lower time frame, find these locations and look for pattern and formations and tell you exactly where precisely you can enter the market. Look at this example. This is FRU stock D1 time frame, and D1 is my longer time frame, and you see the price is below the SMA 200, so that means the trend is downward. So in order to find the area of value, in order to exit the trade, you go to one step lower time frame. This is D1, longer time frame. You go one step lower. That's H1 time frame. So each candle represents 1 hour of trading. And then look for places that the price come close to the market structure. Like here, like here, like here. These are places that has value. And you can exit the market here, use patterns and formations in order to tell you precisely where exactly you exit the market. So in my next slide, I'm going to show you all these things plus where you put your stop loss. Practical example. It is very important to pay more attention to the following procedure. This is Lithium American Corporation stock, W1 time frame. Each candle represents 1 week of trading. It takes 1 week that each candle be painted. Now, in order to find the direction of the trend, the price trend must be above the 200 SMA in order to be uptrend. So the price right now is above 200 SMA, so the price is upward, and it continue going upward with a big probability. Now, here I installed 2 trend line. One act as resistant area with almost 4 or 5 touches, and another one trend line act as a support area with more than 5 touches. So both of them, they're valid. And in order to find the entry trigger and area of value, we go to one step lower time frame. So let's continue to go to one step lower time frame. This is the same price trend, lithium American stock, and instead of W1 time frame, now you have D1 time frame. 1 day of each candle represents 1 day of trading. It takes one day each candle be painted. Now here we have is our trend line, two trend line as resistance and support area, and I indicate 4 station, number 1, number 2, 3, and 4, which I'm going to use number 1 and 3 as entry point, and number 2 and 4 as exit point. So in order to show how you enter the market precisely, I am going to magnify station number 1 to show you exactly clearly how you can enter the market. So let's magnify station number 1. Now this is the same station number 1, which I magnify it. Now in this station number 1, the SMA intersect the price trend at this point. So that's the best location to enter the market, since the market, we have to just analyze this 3 candle. I'm going to blend these 3 candles. So I already blended here. I take the open of the first candle, and I take the close of the last candle, and then I take the high and the low of the pattern. So the outcome is nothing but a big bullish hammer, which is a sign of a price reversal from downtrend to uptrend. You see this big 4 Marabozo type candle that is going hitting upward now, and with a little pause here and continue going upward. Now in order to enter the market, you have to use this candle. As soon as this candle passes the close price of this candle, you enter the market and you put your stop loss 1 or 2 ATR below the market structure, which is SMA 200 here. Now let's check station number 2 and number 3 and number 4. This is station number 2, that is station number 3, and that is station number 4. Now in station number 2, the price is going up, and you see here is a big shooting star, and the price rejected by the resistant area and bounced back, and followed by big, powerful, explosive coiling inside bar. This is the mother bar, that is the inside bar of this mother bar, and this is the inside bar of this mother bar, and both of this inside bar is the inside bar of this mother bar. So that's, they call it coiling inside bar. It has an explosive power. So in order to exit the market, you exit the low of the inside bar, and you put your stop loss 1 or 2 ATR above the trend line. So you see the trend is going strongly downward all the way here, and when it reaches here, it loses its momentum and also its volatility. So we have to wait for the trend to whether to go up or break the support and go down. Here the trend got rejected by the support and heading upward, and then you have to wait for this candle. As soon as this candle passes the close price of this candle, you enter the market here, and you put your stop loss 1 or 2 ATR below the support area. You see the trend is going upward all the way here. We have two situations here. The first situation we can analyze like this, that we have a big shooting star here, followed by a big coiling inside bar with explosive downtrend power. So you can exit the market at the low of the coiling inside bar and put your stop loss 1 or 2 ATR above the trend line or resistant area. Or you can blend this 6 candle 1, 2, 3, 4, 5 and 6. This 6 candle, you see the outcome. You can take the open of this, the first candle. You can take the close of the last candle, and then you take the portion between opened and closed. This is a small bullish portion, and then you take the high and a low of the pattern. So you get a big, strong shooting star, which is the sign of a price reversal from uptrend to downtrend. So that's how you proceed with entry and exit point. And I hope you enjoy this practical example, and it is very important to pay very good attention and use it in your trading strategies. That's all, folks. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.